Hello, everybody. Stocks pulled back on Thursday in a constructive manner with the NASDAQ and NASDAQ 100 leading the way down. However, not a big deal. As you can see, volume was below average and lower than the session before. The S&P 500 also pulled back, but not nearly as much, 0.47. Volume was slightly below average and lower than the session before, so overall constructive. The Russell 2000 also only pulled back 0.63%, so it did not lead on the downside. So as far as I'm concerned, so far this is a decent pullback to the uptrend that we got off the February lows. That being said, there is still resistance everywhere. The February highs, the 50 200-day moving average, and the not shown 100-day moving average. This gap level right here, which coincides with the December and November lows. Not to mention, if we draw a trend line across here for the October lows, we got this, that it's having a tough time getting above. And then also, that's about it right there. This is going to be probably key support level right here, not only on the recent lows, but I say if we retake out those August lows and this gap area here, we're going to probably shoot to new lows. But so far, we're holding on everything. It is what it is. It's not great. It's not good. Utilities led on the session. A lot of good moves in utility stocks out there. Kind of looks like a mini cup with high handle here on the XLU. Bullish setup. Looks like it's building a big cup pattern. So utilities are leading, not necessarily a strong indication that this rally is just ready to turn into a full-fledged new uptrend that lasts throughout the rest of the year. And besides that, gold stocks did very well with IAU, as you can see, moving back-to-back pocket pivot point signals the last two sessions, with a lot of stocks moving and just looking good overall out there. And then not only that, I noticed a lot of patterns are starting to get more of a U shape to it. It's not V, but it's not U either. It's kind of in between. But the volume's lower, like on RACs, and now it's starting to pick up. So, I'm starting to see some rounding out stocks off the lows. It's always something that you want to see if anything's going to turn into a real uptrend. TRGP is another one. CNNX, there's another one. You can notice a lot of green in these. CAI, another stock. Chef is another example. B, TKR, and these are all kind of in different industry groups, but as you can see, they're in different industry groups, so that's good to see. It might be more indicative that the market might be trying to put in at least a tradable low. And nothing says that, so everybody's thinking that, this is the ultimate bottom that leads to a bull market breakout to new highs, and or everybody's saying that we're going to fail at these resistance levels. There's also a possibility that the market trades up to the old highs, then trades back down to the lows here in August and February, then trades back up to the old highs, and we stay range bound all year in a big, giant volatile range. So keep that in mind. It could easily happen. And just to show you what happens in a volatile market, this would not happen in any other market environment. Even if this was 2013, 14, 15 maybe, we would not be out of all of these names. But stocks like BMA, where we went long in January here and we were shaken out just a few sessions later, it's now up 16%. Then there was REXR that we went long back here. We were shaken out back in January. It's now up 11%. What are you going to do? It's just the kind of market that we're in. VLRS, I think that my first buy signal was down here. I'm not sure. Maybe actually it was probably back here. I don't know. I know for a fact that I was buying this one at least. But bottom line, it had to been back here because I didn't get cut out fully all the way till this December move because it went below these lows, which means I was long from here, which means VLRS, 22% gain. Doesn't matter anyway, because I was not completely out of it in December. If I wouldn't have been knocked out in December, it would have been knocked out in January. In a stronger uptrending market like 2003 to 2007, 2013 and 14, and definitely 1996 to 1999 during any uptrend, we're not getting shaken out of VLRS. And then also a gold stock that's trying to hit new highs almost gave me an actionable signal today. GSV got shaken out in January. Up 39%. And the worst of them all, OCLR, which gave me a long signal back here. I don't know what the hell I've done with this position. I can't quite remember, but somehow I kept my stops too tight here instead of keeping my stops here. This support held. And then I got a pocket pivot point signal and went long the stock again after I got knocked out here. And then I was fully knocked out here. Now, I don't know if I would have been taking 316. I probably would have moved my final stop up at 319. So I would have been knocked out of the entire position anyway in January. The whole point is if I still if this is a market that's anything like 03 to 07, 96 to 99, 13 to 14 for me, we're still long OCLR and we have a 51% gain. So just realize this is a volatile market, and this is why I'm really, really careful, especially in this tape, about going long any stock, which leads to the new long tonight. Before I get there, I flagged MSG, but I would need to see MSG close above the 50-day moving average before thinking about it. GSV at one point intraday, I think 81 was the high of the day, and if it wouldn't have traded up to 83, this would be an add signal to the position if I was still long. But for a new long position, this stock is a little too far off that high a day, and is still, I would like to see it be touching the 20-day moving average, so it's a no-go for me. Now on the other end, AU wasn't up, was not up all the way to 1126 whenever I looked at it. It was only around, I think, 1111, and if it would have closed there, it would have been close enough to its low a day to warrant a new long position. But with it being up just 5% from the session before, and basically with it being up minimum, that can be like 10%. I'm going to have to risk 10% on the trade and know before I'm wrong. That's not a big enough surge in volume and BOP to want to get it here, especially with the 50-day moving average, I believe, still slightly below the 200. If the base was a little bit longer, sure. And even though AU almost touched its 20-day moving average, it didn't touch its 20-day moving average. And right now in this tape, it's kind of a requirement of mine. It might change later on. I also flagged TGD. That base is not long enough. If this price and volume move happens with this kind of BOP and this base is basically long enough to where the 50 and 200-day moving average is squeezing it, yeah, I'd be going long TGD. But can't go long any of those names because none of them offer up the proper reward risk setup with the current tape, even though we're under a follow through day. Then only new long is OGS. OGS is a CAN Slim quality utility stock. Not only is it CAN Slim quality, but it is the top rated stock in the utility group. I'm not sure which one, actually. I think it's like utility, gas utilities, and that's what this one says on Telechart, so that's got to be relatively right. But it's number one in its industry group. It's the number one stock there with a 79 EPS and a 98 relative strength. Pocket pivot point signal today. Volume surge, small BOP surge, but there's been a lot of accumulation since it moved up off of its 50-day moving average in January. Strong relative strength, and I know that I said it touching the 20-day moving average is a requirement in this tape. Well, not if I'm only going to risk about 1 to 2% on the position if I'm wrong. The first sell stop levels with the close below 56.93. That is today's low a day, and the final sell stop is with the move below 56.18. I will probably have the entire position at 56.18 just to give it a little bit of room because it is so far away from 50-day moving average. However, if it does move below the February lows, I'd rather reevaluate and then take a position later on. But for now, that's it. OGS, it's 1% for being in the CAN Slim scan and 0.5% for being a new 52-week high on above average volume. Even though there's a volume surge here, it wasn't high enough to make the price volume BOP scan, or else it would be a 2% position. But that's it. There's no sells, there's no covers, there's no shorts.